So I just want to bring your attention to gold on the weekly time frame. First, we have rejected the 382 Fibonacci retracements, which is significant. Gold is very harmonic. It conforms very well to Fibonacci retracements and extensions to boot. But if we scale down to the daily time frame, we can see that we actually do have a firm ABCD completion. So if we look at point A, B, C, D, we can see that we actually do have, if we look at the 1.618, just about eclipsing, just about shy of the bearish pin bar reversal there. What is interesting as well is the fact that not only do we have the ABCD completion point just shy of the 1.618, but it also overlaps with the 382 Fibonacci retracement, like I showed you on the weekly time frame. So we have a confluence here, ABCD completion, and of course Fibonacci rejection on the higher order time frame, the weekly. So what we can do with gold is simply hedge our bets. I know that we are long on silver, and we will have adjusted our stop loss accordingly if precious metals do take a dive. But what is interesting here is the setup on Friday closed as a bearish pin bar reversal. So what we can do is trade it like a bearish pin bar reversal. So what we can do is simply place our order just below the low of Friday, stop loss above the high, and target the previous swing low as a potential take profit too. We'll scale out at a 1-to-1 if as and when we're triggered into the trade, and let's get our profit shooter on there so that we can establish how much we could potentially make from this one if we're targeting the previous swing low. So let's just put this on and rejig it accordingly. So our entry is below the low on Friday, and stop loss is just above Friday's high. So that's a 4.82 to 1 reward to risk. So we're risking 2%. That's just shy of 10% potential return. And that is very good reward to risk if we're risking 2%, that is. And what you can do as well, if you wanted to be slightly more aggressive with this one, is simply enter at the midpoint, because we can see that there's some overlap with the previous couple of bars. So if gold does come up and make a lower high on the hourly time frame before it comes down, we could get a much more efficient entry, even though the reward to risk does make sense as it is. However, with this entry technique, it will mean that you sacrifice safety with this trade. I mean, the one requirement about trading the break of the low on that bearish pin bar reversal is we're only triggered into the trade if there is momentum behind the downward movement. If we have our entry in the midpoint here, sure enough, our reward to risk is far better. Let me demonstrate to you. There we go. So if we have the midpoint entry there, stop loss above the high, it's 10 to 1, so 20% potential gain if you're risking 2%, and we're targeting just in advance the previous swing low. However, what could happen adversely is that the market goes up, takes out the high of the bearish pin bar reversal, and you're triggered into the trade. It's a full hit, and you don't have that safe entry like you would if you're trading the break of the low. So there is that age-old paradigm. What do you rather have? Would you rather have a high-risk entry in pursuit of higher reward, but a greater chance for loss, and run the risk of not even being triggered? Price might not actually come up to the midpoint to trigger you in. Or would you rather have a confirmed entry where you are entered into the trade where there is momentum in our favor to the downside? We might get lower reward to risk, but we do have, and we have to wait longer for that profit before we can scale out. However, we do have in our favor the certainty and the extra confirmation. So what would you rather have? Would you rather have a higher risk, higher reward? Or would you rather have a lower risk, lower reward? It's entirely up to you, but there are a range of two options there. So just to really kind of recap, we can enter at the break of the low, stop loss above the high, as this represents a cluster between the completion point of an ABCD pattern and the rejection of the 382 retracement. That would be entry one, the safer, less profitable entry, or do we go for the slightly more aggressive entry at the midpoint with our stop loss above the high? It's entirely up to you, and that really does depend on what kind of trader you are.